So today we're talking a little bit what a bear market is, what a bull market is, and what determines a recession. So hi, welcome back to my YouTube channel. This is Claudia. And in this video, I want to talk a little bit the different fluctuation in the market. And when we're talking about the market, it's the S&P 500, so stay tuned. So a decline in the stock market is very normal and it happens all the time. Sometimes it happens daily. It happens in a small percentage throughout the year, and of course, so there's a minor decline in the bear market, but there can also be a full-fledged bear market, and which we have seen just recently. So a correction is when the S&P 500 declines by 10%. The S&P 500 holds the top 500 companies. This can happen several times a year. Corrections can happen daily. Bad catalysts like bad earnings reports, high-profile companies, that have high percentage in the S&P 500 can bring the overall market down. A full-fledged bear market is a little bit more significant. When the S&P 500 declines 20% or more from its recent highs. However, it happens less frequently. From 2000 to 2013, the S&P experienced two bear markets. A bear market is a result of investor pessimism towards the future of the economy. So sometimes a bear market is a pursuer of a recession. And a recession is determined by two bad quarters of GDP, gross domestic product. And it's mostly when there's more unemployment and there's less consumer spending. That's what determines a recession. In 2000, we had a bear market through the dot-com bubble, and the market went down 47%. So that's very dramatic. But then, however, in 2008, the financial crisis, our market went down over 50%. And of course, that was very scary. So the average bear market is about 38% from its high. How can we determine a bear market? A bear market is when the broader stock market goes down 20% below its recent highs. And the way investors measure that is usually by the 200-day moving average, or by overall looking over the last years of the overall highs and see when it goes when the stock market goes down 20% from the overall highs. So, however, a bear market doesn't last very long. A bear market is an average. I think it is an average of 8 months, if I'm correct. If not, please correct me in the comments. But a bull market lasts very long. I think the last bull market lasted 11 years. So every 8 to 10 years, we have a recession and we have a bear market. Investors usually count on that, which means they have cash set aside for investments. A recession and a bear market is nothing to be afraid of. It's an opportunity to buy stocks and to buy assets. So whether you are invested in the stock market or you're invested in real estate or in businesses, it doesn't matter. If you're going through a recession, don't get scared. I know it's scary for high unemployment, and the goods go up in price. Inflation is extremely high right now. It's still at 8.5%. I think it was at 9.1 at one time. So we'll see next time they measure inflation. I'm not sure. I think it's in September. So it's coming up when they measure where we are at and how much interest rates have to be raised. And all that really does is, the reason to raise interest rates is to stop those inflated prices, because the more demand, it's always about supply and demand. The more demand there is, the more the prices will raise. And of course, with supply issues, so there's a shortage in supplies, and that plays a big role when it comes to inflation. However, this will too go away eventually. It'll all pass. But right now, the Federal Reserve is working on increasing interest rates so prices can drop and we'll go back to normal. It'll take a while, you know, it's really, really overinflated right now. But so it'll be back. But right now, use this time for your investments. If you're investing in real estate, I probably would wait just a little bit longer. But that's just my personal opinion. You know, nothing that I say on this channel is any kind of investment advice. So just note to that. But stock prices are extremely low. They're all undervalued. So it's a great opportunity to jump in. Anyway, I hope you liked this video. And if you did, please put a like on there and subscribe. I'll bring out new videos every Friday. Just simple, short videos, simple explanations, not making anything complicated because we don't have time to search for hours on the internet. Anyway, so thank you so much, and I'll see you soon.